What is Forex? Hello there, my name is Billy Joe. Welcome to Invest Pro.
And I am Ria. Today we will be discussing what is Forex.
Forex is short for foreign exchange. It is the conversion of one currency into another.
But how does it work?
Here's an example. Let's say we are traveling from Philippines to the US. Have you ever noticed those currency exchange booths at the airport? Since we know we cannot use our pesos in America, we need to do a foreign exchange by converting our pesos into dollars. And by doing that, we just participated in the Forex market.
Now you're probably wondering, besides travelers, who else participates in the Forex market? Well, banks and businesses does. Here's another example. Let's say you want to start a bicycle shop here in the Philippines and your supplier is in Japan. You go to your banker and say, "Hey, Mr. Banker, I want you to send my money to Japan to buy my supply of bikes." And Mr. Banker will reply, "Of course, we will send your money right away and we will also convert it for you." And that's a simple example of how banks and businesses participate in the Forex market.
Another great example, ladies and gentlemen, would be overseas Filipino workers. Since they are creating their income abroad, any money they send to their loved ones in the Philippines are being foreign exchange. It also works with companies like Microsoft, which has workers on the other side of the globe. Did you know many of their customer services are actually outside of US? Like here in the Philippines, for example. And when it's payday for their employees, they send their dollars to Philippines to be converted into pesos.
Now, let's talk about how big Forex market is.
Let's compare it to the US stock market, since it's the largest stock market in the world. Did you know, as of 2017, an average of $30 billion are being traded on a daily basis? That is a lot of money, huh?
Yeah.
However, with all the money, it still cannot compare to the Forex market because on a daily basis, $5 trillion are being traded on average.
Wow, that's like comparing a mouse to a fully grown elephant. Ladies and gentlemen, now you're probably wondering, how in this world there is so much money involved? Well, it's because the Forex market is the combined market of the world. And it's also open 24 hours a day, where a stock market is only open from 9 a.m. to 5 p.m.
And the reason for that is, it's because different countries, different time zones. When the US market closes, the other markets open, like the Asia and Australian markets. And when those two closes, it's followed by the opening of the European market. And when the Europe market closes, that's right, the US market opened once again. And it goes on and on and on until the end of the week.
As you can see, ladies and gentlemen, the Forex market is the largest financial market in the world because money makes the world go around.
Now that you have an idea of what is Forex and how large it is, let's talk about the many ways we can be profitable in its market. Let's start with the common ways. Do you remember walking in a bank and notice the today's dollar exchange rate sign? Many people like to buy physical dollars during Christmas season because it's the cheapest time of the year due to incoming remittances to the Philippines. These investors or traders usually wait until the dollar goes up later on in the following year, and then they sell their dollars for pesos for a reasonable amount of profit. This is called the over-the-counter Forex trading, or OTC for short.
Now, let's talk about digital Forex trading, which is buying and selling of currencies on a smartphone or a computer. It is where majority traders participate in, whether it's the big banks, big companies, or the everyday citizens. You can pretty much Forex trade anytime, anywhere, as long as you have a computer or a smartphone with internet, of course. Now, the profit earnings of trades will depend on how much capital you have. So the bigger the capital, the bigger the profit.
Another way of being profitable in the Forex market is by becoming an investor. If you don't have the time to learn about being a professional trader, you can always have a professional do the trading for you. Now, the profits will be divided between the investor and the trader, but the profit sharing and the amount will depend on the agreement of the two parties involved.
Since you can become an investor where a professional handles all your trades, you can also become a professional fund manager. This is a profession where you handle multiple trading accounts. Usually, fund managers has a team of professional traders who work together to help their clients become consistently profitable in the Forex market. And of course, the more account you handle, the more profits to be made.
Now, on the non-trading side of Forex market, there are agents who direct investors to a suitable fund managers and Forex brokers. These are called introducing brokers or financial advisors. Their job is to find clients who wish to trade or invest in the Forex market. Their job is not only to direct them, but to also educate them about the rules and regulations and the safety of their clients' investments. Their earnings will be commission-based depending on the broker they represent.
And for introducing brokers who has a large pool of clienteles and has significant amount of funds, they can become a broker. Their job is to be the middleman between the traders and the Forex market. Because without a broker, we cannot trade. And of course, to be a broker, you will have to go through licensing and other rules and regulations. However, not everyone can become a Forex broker because not all countries has a regulatory body that regulates Forex, like Philippines for example. Brokers will be making significant amounts of profits because every trade their clients make, they will have spread commission earnings.
Alright, ladies and gentlemen, now that you know the many of the basic knowledge of Forex, you're probably wondering why choose it over other investment vehicles like real estate or the stock market.
Well, in terms of liquidity, the Forex is the most liquid financial market in the world. Since it's pure currencies and it's the largest financial market there is, you can easily pull out your investments almost anytime, anywhere. Unlike real estate where any rush buying or selling will most likely end up with a loss.
Yes. Let us also compare it to the stock market once again. When it comes to the safety and price manipulation, the Forex market will be a better choice. Stock markets are made of companies that can crash anytime and even closes. Forex market, on the other hand, cannot because you've never heard of a currency closing, right?
Yeah.
And the stock market had events where it was manipulated, like here in the Philippines, for example. But if you want to know more how it happened, you can always do your own research because there are plenty of credible articles explaining the events. Also, the Forex market is decentralized, meaning no countries in the world owns it. So it cannot be manipulated easily as a stock market, unless 3 or more major banks in the world join forces together. Alright, ladies and gentlemen, hopefully we were able to help you understand the Forex market.
And also, if you want to know more in-depth detailed comparison of the Forex versus other markets such as stocks, real estate, mutual funds, bonds, etc., you can definitely check out our comparison video later on.
So, thank you for watching and don't forget to subscribe. And also, if you have any questions, feel free to message us anytime.
We will do our best to answer your questions as soon as we can. Once again, thank you from InvestPro Philippines.